Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a good day in the markets and a very beautiful weekend as well. And in today's action, guys, we have another all-time high record, both on the SPY and the QQQs. This is now the fourth session in a row where we have a gap up and run in terms of our price action. The bulls are really doing a good job pushing the levels higher, but we know that we might be getting into a little bit of overbought conditions, but we also know that that's completely fine. We've created a ton of space, broken through our all-time high resistance ranges, and any pullbacks could just be more buy the dip opportunities. In today's news, we didn't have too much, but this was definitely front and center in this morning's action. Canada rescinding the digital services tax after Trump cuts off the trade talks. Obviously, this piece of news right at the bottom there happened on the Friday session and resulted in a little bit of a sell-off. Apparently now that was enough for Canada to rescind its plans for the digital services taxes. So big tech companies must have indeed enjoyed that, and the markets enjoyed that too. Other than that, no other major news today, guys, other than company-specific news. Apple possibly looking outside of its own corporation to fix the problems that's been having with Siri, which resulted in the stock going up over 2% today. And in other news, Robinhood stock going up over 12% on the day after they're rolling out a host of products towards the European markets. So we'll get into those two pieces of news in the relevant sections. In terms of today's video, guys, we're going to do a few things together. Number one, go through the technical analysis of the charts because today is a monthly and quarterly candle close. So not only will we be reviewing the daily, weekly, and monthly candle structures, but also the ever so rare 3-month quarterly candles, which of course we only do once per quarter. We'll see how we're shaping up the long-term fundamentals, long-term technicals of these markets too, whether or not the bulls maintain control, and if we do lose short-term temporary control, where are the pullback zones to possibly reload some short-term swing trades. After we go through the major technical analysis rundown of the major market indexes, we'll do the exact same thing on our big tech list right down here on the right, and thereafter take a look at the biggest gainers and losers of the day. That is going to be the section where we tackle a bit of the Robinhood news, and to wrap it all up, we're going to take a look at my portfolio for a few of the new trades made today and which trades I'm keeping into the rest of the week. So without further ado, guys, let's jump right into it, shall we? SPY up a very healthy 0.48%, the Q's up 0.65%, and the rotation right now continues, guys. The broadening out of the market is very real right now. Only Amazon, Tesla, and Google bringing down big tech, but the rest of software, services, and semiconductors not doing too bad today. Financials, another decent day in the markets. Healthcare even holding on to its own. And the bottom half of the market, which has been lagging a little bit. Anything from industrials, consumer defensives, utilities, real estate, all catching a bid today. Very nice broad market performance, which leaves you on a one-day relative where most of all major sectors were up and to the right. Technology leading the charge. However, to the downside, we still had some small losses in energy and consumer cyclical. There is some fantastic opportunities, depending if you know where to look in some of the consumer cyclical stocks. I've been bringing up a few of them over the past 2 weeks, but today I'll try to go over a few more. On the 1 week relative, after 6 green days in a row and 4 consecutive gap up opens, where do we stand? Well, only consumer defensives, energy, and real estate are kind of trailing behind the market right now. All of these gains have been pushed by communication services, technology, and financials overall. So that is your market rotation overall. The market still remains healthy. We're currently in greed territory, but not yet in extreme greed. A lot of our momentum indicators are looking good. We are also coming into bullish seasonality. The month of July is the second best month of the entire year. The first, of course, being the month of November. It is very rare that you get a negative July. And with the monthly and quarterly candle closes that we just had, that too indicates that we might just very well get some positive bullish momentum continuation into the months of July. Couple that with the fact that we also have institutions that were largely buying the dip during the Israel and Iran sell-off event, which led retail to get a little bit of cold feet. They were buying the dip there, which did show that the institutions have a lot of room to possibly still deploy capital. So that is additionally another catalyst that can be moving in our favor. And in terms of your momentum indicators, guys, well, short, medium, and long do look pretty good right now. Percentage of stocks above their 20-day EMAs curling up higher, going from the 63 possibly up to the 70% mark. That is when you typically find sometimes a short-term top in the markets. But when you take a look at your medium and long-term indicators, guys, percentage of stocks above their 50-day EMA at 68, still not very overbought in terms of short or medium-term action in the markets. Percentage of stocks above their 200-day EMA, this is the smoking gun in my opinion, right? Only 47% of stocks are above their 200-day EMA, guys. this is not very many at all. It doesn't show that the market is very broad. So even though we can have some pullbacks in some of the names that have ran a lot in the most recent 1 to 2 months, there is a whole other section, which my mouse is highlighting right now, and even healthcare, that has not ran. So even if you get some short-term pullbacks on tech and some rotation, there's a lot of names that could use that rotation, which could keep the SPY relatively healthy. I know the big tech names represent the largest weights, but it would look something like this, right? Any short-term possible pullbacks could just be large rotation catalysts for the market overall. The long-term bulls control all the time frames right now, so everything is looking quite good. In terms of the pure technical basis of the SPY right now, very nice leg of expansion here by the bulls. If we get a pullback, guys, just to remind you, anything above 592 is going to be looking for a higher low for possible further trend continuation. The bulls have tons of space, so even if we come down, right, and try and fill a few of these gaps here, possibly as a result of some news catalysts that we have this week, such as the jobs openings report or the manufacturing report tomorrow. If those are not too well received, you could expect a little bit of a pullback here. The non-farm payrolls on the Thursday session as well could be one little catalyst for a short-term pullback, but understand who is in control after that short-term pullback. It is definitely your long-term bulls, right? Keep in mind who's in control of the weekly right now on the SPY. It is indeed the bulls right now. Anything above that same 590 area, just looking for a weekly higher low, beautiful weekly uptrend. And in terms of the monthly candle closes, guys, this is an extremely bullish candle close. Closing almost at the top end of the candle does portray that the bulls may just be looking for some expansion. If you were to just follow a normalized trend line that we've had for a few years running right now, that would put you sometime in the next 6 to 9 months, provided we don't get a recession, of course, all the way up there, and that would not look that awkward when looking at that longer duration trend line overall, somewhere in the high 600s, so maybe another 10% for the markets. Whether it's between now and the end of the year or into 2026, that is left to be determined, but this is a monthly chart, right? It doesn't mean that it has to go in a straight line, but this is a very nice bullish engulfing move overall. And there's one piece of data as well that shows what happens when we go for a 1-year low to a 1-year high in a short amount of time. This is data compiled by Sentiment Trader overall. Very good platform that they have. After the S&P cycles from a 1-year low to a 1-year high, where does the market end up? There is only 2 times historically since 1963 that we've actually ended up red. Once in the 1980s and another time in the early 1990s. Every single other one of these catalysts have been positive. So it's not a 100% hit rate, but is a very high probability overall. So not looking too bad there in terms of our monthly candle closes. How it ties into the data after we completely V-shape a recovery into, well, it ties into this data after a V-shape recovery. And then after leading into bullish seasonality for July, all things do point to the fact that the technicals of this market would lead towards more upside. You also additionally have, right, a monthly crossing back of the MACD, which is looking very good on the quarterly candle charts, guys. This is a hammer candle. This is one of the most bullish trend continuation candles that you can possibly get, closing the quarter at the top end of the range after going all the way down, tagging the 12 EMA, and now rallying. Usually when you do find tags of the 12 EMA, the market can thereafter put in a significant rally, as you've seen many, many times over the last 10 years since 2015. Whenever we've come down, clipped into it for various reasons, there have been many, right? Well, as soon as we've come down and clipped into it, normally you do get continuation for the quarter thereafter. So all things are lining up. That's what I like to call confluence. The stars are lining up to point that we should still have a bullish leaning bias in the markets. Moving on to the QQQs right now. Qs up 0.65%. Same analysis right now. Anything above 524 on a pullback, looking for a higher low for possible further trend continuation. Beautiful support below, which is the highs of the prior resistance range, and that is 537 down to 523. So even a short-term pullback, guys, probably will result in a buying opportunity, even if you lose the daily uptrend. The bulls have tons of space, right? They're just gonna be looking for a weekly higher low at that point. Gorgeous trend expansion. Weekly higher lows are set, looking for a new higher low for possible further continuation into the month of July. Monthly candle close is extremely bullish, the same thing as the SPY, leads us to believe that there could possibly be more monthly continuation to the upside. MACD on the monthly is now crossing as well, and this quarterly candle close is extremely bullish too. Bullish hammer candle close, looking very, very attractive, all things considered, whether you look at the weeklies, the monthlies, or the 3-month time frames, and our breadth indicators showing us that more breadth is hitting more aspects of the market. Definitely goes to show, guys, that the pain trade, may just indeed be more upside. Moving on to financials right now. Financials up 0.83% today. Very bullish news overall on financials today, mostly led by Robinhood, but financials have been ones that have been leading the charge of the breakout recently. So looking not too bad, right? Beautiful daily uptrend right now. Any move lower looking for a higher low, anything above 49.83, looking for that higher low. Beautiful support below us right now, 51.50 down to 50.77. This is a beautiful breakout, retest, and run trade. I mean, they all are. The SPY is a gorgeous trade for that purpose. Whether you use call options, futures, shares, it's up to you. The QQQ is the exact same concept. Financials is displaying many of the same characteristics. The bulls are in long-term control of the weekly time frame after a very nice accumulation bull flag. We get the bull flag breakout, looking beautiful for some continuation. And even on the monthly time frames too, guys, this is a very beautiful monthly chart overall as well. Beautiful monthly candle close towards the highs, shows that more expansion is indeed possible beyond those all-time highs of roughly 52.5, and the 3-month quarterly candle displaying the exact same characteristics as the SPY and the QQQ definitely does lead us to believe that financials may be in a very good position to benefit from the possible rate cuts that should be coming between now, July, and the month of September. Moving on to XLV right now. XLV up 0.64%. One of the sectors that's been lagging the most behind. The bulls are trying to put in some work, get the daily uptrend back. We'll see if they can do it. The clearest time frame, in my opinion, is the weekly time frame right here. It was a weekly downtrend, nice 75% bounce, looking for the higher low and looking for the weekly uptrend recapture to the bulls, something we have not had since the month of February, a weekly uptrend. That being said, the monthly candle close is not as bullish as we've seen on other sectors, all right, but it's also not displaying the characteristics of something that necessarily wants to head to the downside, right? So say a bearish Marabusu candle close or a big candle close towards the lows. No, it's showing that this is the first monthly candle positive close since the month of March. So not looking too bad there. In terms of your quarterly time frame too, very nice candle close right now. The bears tried to bring it back in. The bulls retraced almost 50% of the candle. It does go to show what I was saying. There is a lot of support down here. It's going to be very tough for the bears to break through this. I still do believe that healthcare is a great sector to play. If you're looking for something that's been lagging behind the markets, couple that with the fact that we're literally just hugging the 50 EMA on the monthly. How often does that happen? Once during COVID, once barely in 2015, and then the last time you have to find that was 2011, and they've all been decent buying opportunities other than the great financial crisis, of course. I mean, you kind of got to take your chance at that, right? Not financial advice, but that's what I'm doing. Moving on to SMH right now. SMH up 0.17%. Not the worst look for SMH either. Not quite setting a brand new all-time high in relation to the candles that we previously had in July of 2024, but very close, right? In the event we find some weakness, because we are somewhat overbought conditions on the RSI right now. Oops, let me move that down below. We're somewhat overbought, 75 on the daily RSI. Tons of space here, guys. Anything above 257 looking for a higher low for possible further trend continuation and a smash through the all-time highs. If we get the breakdown here, daily downtrend, understand who's in control. It's very obvious, right? Big support range below 260 down to 250. Looking very good, guys. The bulls are in full control of this chart. Beautiful leg of expansion. Any pullbacks will indeed be buying opportunities. The bulls control all the time frames, and so be it. If we fall back into support, all the short-term moving averages will be there as well. Even more of a reason to possibly buy that dip. Monthly candle close is extremely attractive. This is one of the biggest candle closes that even we've had since the entire AI trade started. Find me a more bullish monthly candle close than this one. I will wait. This is the most bullish candle close, 16% in a single month, closing near the top end of the candle, and the quarterly candle needs no description, right? Beautiful retest of the 12 EMA on the quarterly time frame. Back tested it, even came lower, guys, and now smashing through the top. This is a hammer candle. Definitely goes to show that more continuation might just indeed be possible, heading to the high 200s, possibly even tackling the $300 range sometime in the next 3 to 6 months. This is a 3-month candle, right? So you would expect that sometime in the next 2 candles, especially with how bullish this one is, even if we get a pullback, that you could possibly go and hit that $300 range. So keep that in mind. And lastly, the IWM Russell. The IWM Russell not performing the worst today here, 0.14% to the upside. The bulls are still in full control of this chart as well. Higher lows are still set 207.25. Any move lower looking for a higher low for possible smash of the resistance range. That's if we don't just do it right away. If we do it right away, we are getting probably stopped out at resistance above us, which currently stands at 225 to 232. The bulls not looking too bad. They do control the weekly time frames. It's just not as pretty as the other charts out there, but the Russell Russell is definitely playing catch up and will probably do a lot better come closer to that first rate cut coming possibly in the month of September. Very decent monthly candle close shows the bulls that they do have momentum, recaptured all the monthly moving averages that we had lost since the month of February, right? The 12, the 26. We never really lost the 50 in terms of a close. Nice rejection off of it, but now we got the short-term monthly moving averages back looking good. And the quarterly candle close also shows that the bulls might just be looking for a little bit more here. Nice little rejection down there and possibly going, especially with the month of July. I would not be surprised if it does indeed carry up the Russell as well. And that pretty much wraps up our index rundown. So now let's tackle some other charts that might be notable to us. So the VIX, slight little uptick today, but still not going anywhere. You usually get concerned when the VIX starts popping up into the 20s, such as it tried to attempt to do during the Israel-Iran conflict. As of right now, we are still oscillating to the downside, which means that it might be a good proposition for any sectors or companies that you're looking to build leap call positions in. Now is a good time when the volatility is low, right? This is the time to buy options. This is the time to sell options. Moving into the dollar, this dollar is still remaining extremely weak right now, which is not the worst thing, especially for US equities, right? Not only does it incite people from abroad to deploy money, buy US dollars, and buy US assets in the event they want to rotate back after clearly rotating away from them in the first part of the year. But however, keep in mind all the companies that operate internationally, guys, companies such as Visa, MasterCard, Microsoft, Apple, whatever company generates money in different currencies, all those other currencies have been appreciating against the dollar. For the past 2-3 years, a lot of these companies have been dealing with negative currency headwinds, which have, in other words, dropped their earnings a little bit because of the currency impact. This will actually might be the first quarter in which we see positive currency headwinds for these companies, at least the first one of its kind in the last 2-3 years. So pay special attention to those quarterly earnings that are coming up in about 2-3 weeks time. Moving into the US 10-year yield right now, US 10-year yield down another 1% as we get closer and closer to those rate cuts. Not looking too bad here, guys. We're currently finally coming into the area that I want to see the bears take over. Break below 4.2. Give me a nice little break below 4.2. Weekly downtrend is in motion. You might just be looking at a monthly downtrending pattern formation starting, and the same thing can be visible on the 20-year yields. If you break 4.65 to the downside, beautiful weekly engulfing move right there, and might just be looking for a little bit of a tapering off of the higher term yields on the 20-year overall. As you get closer to that rate cut, obviously this is favoring some of your more interest rate sensitive sectors, such as consumer products, such as industrial, such as real estate and utilities. Now moving into the bonds, which is why I've been saying bonds has been a very good time to be building a position. It's not going to move fast, but it probably will move for sure, provided that you have a long enough time horizon, such as the next 12 to 18 months, to really let this one expand as those longer term yields do come down in the markets. Moving on to gold right now, gold protecting its own 12 EMA on the weekly time frame, the clearest time frame, because the daily was a very clear loss of the daily time frame, right? Very clear daily downtrend, but barely holding on to the support range, which stopped at about 32.50. That being said, we have nicely backtested the 12 EMA a couple weeks in a row right now. After a beautiful range of accumulation, they try to go for the breakout. We're trying to go for the weekly higher low and maybe make the trend, not trend change, but trend continuation attempt for the bulls. We will see if we can actually get that started or if we break down. Gold is not looking the worst, but keep in mind on the monthly candle close, this is your monthly candle close. It definitely does not show the strongest momentum, and we would not be surprised, guys, if the equities market keeps running, if this indeed is gold's time to possibly consolidate after a great first half of the year. They are very extended monthly overbought conditions on gold. It's been like that for a while, arguably one of gold's longest periods in recent memory that they've been monthly overbought, very extended from the 12 EMA, very extended from the quarterly EMA as well. And I'll just remind you that does not last forever, right? All the equities just went into their monthly pullbacks to hit their 12 EMAs. Maybe now it's gold's turn, right? So just keep that in mind. If you are playing gold, maybe it's not so simple as every single dip in gold is a buying opportunity, because we can see some very clear rotation now that the markets are moving more risk on. On to Bitcoin right now. Bitcoin down 1.18%, kind of, kind of slow, to be honest with you. They had a very good weekend overall. Saturday was a green day. Sunday was a green day. I was expecting more follow through on Bitcoin over the course of this morning. It was very clear what the bulls were trying to attempt right here. They just can't get it done, right? So all that being considered, we haven't really broken trend at all. This is still a very nice daily engulfing move. After a daily downtrend, the bulls engulfed the move. They were looking for a bit of follow through. They unfortunately did not get it. That being said, the clearest time frame for me is the weekly time frame. This has been a bull flag for I don't know how many weeks in a row. Last week's candle close was very bullish, so any early week weakness, guys, could be a decent little buying opportunity, especially if we can curl down into the 105 to 102 area. Very decent area to be accumulating some Bitcoin. Traditionally, Bitcoin is also positively, seasonally positive, in the month of July. And you could just be looking for a further breakout, especially if equities do follow that same pattern, right? The Bitcoin monthly candle close is going to be happening in roughly 2 hours. This one closes at 8 p.m. Eastern overall. The candle is not looking too bad, but does definitely show that the bulls are in control. Trying to close the first candle, guys. The very first candle, monthly candle close above that 105,500 resistance mark. Not looking too bad. And the quarterly candle close speaks for itself. Very bullish candle close. It closes in 2 hours. Definitely lets you know that for the next quarter, you might just be able to get some follow through the Bitcoin. Psychological levels 115, 120. I am positioned in Bitcoin, but I've been positioned in Bitcoin for a long time. The only swing trade I have on Bitcoin right now, because I have a lot of Bitcoin on chain, guys. I also have a lot of Bitcoin in the form of ETFs. But swing trades right now, the only one I have active is a very small one on MSTR. I'll show that to you at the end of the video, of course. Moving on to Apple right now. Apple up 2.03%. So what happened on Apple today? Apple at one point today, before the pullback, end of the day, was up 3%. It was a bit of a funny news cycle here. First, we got a 0.5% downswing on Apple, saying that Apple was facing a class action lawsuit in California over claims of misleading statements regarding AI features in Siri affecting iPhone 16 sales. So they had that class action lawsuit. They also had another class action lawsuit claiming that they were a monopoly of the smartphone business. I mean, a few other manufacturers would disagree, but hey, those were the two headlines that came in tandem. And look at the timing of this news. It was hilarious, right? These two pieces of news went hand in hand in the later parts of the afternoon. And then we got this piece of news right here. Apple weighs using Anthropic or OpenAI to power Siri in a major reversal. So everybody knows that Apple's been very slow about their AI rollout, especially in terms of Siri. They had a promise to us, which they gave to us about a year ago. They broke the promise. Siri was not ready, not even close. And the AI features that have been rolled out so far, let's just be honest, have been very underwhelming, which led to this article that was published just last week. Forget $100 billion buybacks. Apple must make a big AI move to turn this stock around. June 24th. Well, I guess they were right? Just that news that they were possibly going to use external AI agents to work on Siri within Apple's cloud infrastructure led to a 3% increase. So obviously that's the reason that Apple's been down, right? If that amount of news translates to this move in a stock, well, you can understand that that's exactly the news that that investors in Apple are looking for. That being said, that was the news that moved Apple on the day. Hopefully you guys enjoyed that. That being said, beautiful new uptrend on Apple. Now it doesn't mean much because we're in the context of a very tightening range, but we have some clues here, right? Support stays below 196 down to about 187 and resistance 221 to 211. I was saying back last week and the week prior that Apple is probably a decent candidate for some call options with a bit of time, right? 6, 7, 8, 9 months. Give them a chance to catch up to the rest of the market, especially into summer seasonality. And you could be surprised with the way Apple can move off of any positive news catalyst. Daily uptrend is very nice. The bulls are now in control of that. The weekly, this is the first time that in a while that the bulls are trying to peak above the 12 EMA. But also look at this weekly MACD, guys. The weekly MACD is crossing. Apple's one of the last ones of all its other big tech peers that has crossing momentum now to the bullish side after an accumulation range tightening up. Usually when you get such a long duration range and it tightens up like this, when it breaks hard. You don't always know the direction of the break, but you can kind of have some hints. If the rest of the market is bullish, Apple's one of the biggest components in the S&P. You have the MACD curling right here, and Apple is going to have to play a bit of catch up. Well, the bias, of course, is bullish. Do you guys really think the rest of the stock market is going to absolutely go to the upside in July and Apple's somehow going to lose 10-15%? Probably not, right? So that being said, not a bad trade for Apple. Looking at the monthly candle close, first green monthly candle close since the one we had in February. This is not a bad basing out of the support area. The bears tried 3 times to get through here, couldn't get it done. That was prior resistance. And the Corley candle, in my opinion, this is the smoking gun, guys, right? This went all the way down here and now closed in the top 25% of the candle. Now, this also is an inverted hammer candle, or rather a hammer candle. It doesn't look too bad. Obviously, it did not close green, but it does show that the bulls are looking to progressively buy the dips, maybe for some accumulation. This is quite simply, guys, just a monthly breakout, deep retest, but now they've retraced a lot of it. Could just be looking for upside continuation. Beautiful test of the 12 EMA. Right? So not looking too bad on Apple, guys. Pay attention to this one. It may just surprise you. Moving on to AMD right now, down 1.33%. We've been talking about this for 3 days now. It's very obvious why AMD is struggling. We're coming into the next zone of resistance, right? You could clearly tell that AMD bulls were struggling with this resistance area, and now they're struggling with this one as well. So 155 up down to about 145. That 10-point range is the resistance zone. Very clear who's in control of the short term here. The bulls, right? Very clear. Any move lower looking for a higher low. Anything above 115. Higher low for possible further trend continuation. Support is very clearly below 132 down to 119. So whether we do it in one clean shot or we set a daily downtrend in the process, which just leads to weekly consolidation, the weekly bulls are in full control of this chart as well, we are probably going to be looking for some dip buying opportunities down here. Now, whether you want to use shares, whether you want to use options, whether you want to just write puts under the market like me into the EMAs, which are in the mid 120 range, that is perfectly fine. But that could be a very logical pullback area for AMD after such a very nice move. The valuation right now in around the 140 range is still very manageable considering the expansion of the fundamentals and of their margins that they stand to make here in the next 3 years worth of time. So pay very special attention to that on AMD. Moving on to Amazon right now, Amazon down 1.75%. The only news that came out was on Friday. I mean, this has been planned for a while, but Jeff Bezos sold another $5 billion of Amazon stock. He's been doing that pretty much every year for the past 2 or 3 years just to fund his other projects such as Blue Origin. Nothing more, nothing less, guys. Jeff Bezos has been doing this. I mean, geez, I remember Jeff Bezos putting in those sales in 2021, which led to the infamous wall of Jeff Bezos. At that point, it used to be $3,000. There used to be a psychological wall here where every time we would get to 3,000, 3,500, Jeff Bezos would sell some shares. So I guess right now it's the same concept. He's just raising money for his other businesses. No other bad news on Amazon, so to speak, right? That being said, who's in control? Daily downtrend into a nice engulfing move. The bulls have a lot of space. They're trying to reset the daily uptrend and go for the breakout of the resistance range. So anything above 207, just looking for a higher low for possible a second attempt at the resistance range, which is 228 down to 217. And even if we pull back more on the weekly, guys, the bulls have a ton of space here. They control the absolute heck out of these charts, looking pretty good. Looking for a higher low, anything still above 207, looking for a weekly higher low for possible further trend continuation. So the bulls are looking good. I was telling myself, because I can't tell you guys anything, just for it not to be financial advice, right? But I was telling myself to play Amazon back here. We did play it as much as we could in terms of short puts. I've had Amazon leap since all the way back there, so I'm not adding to them, nor do I have any short-term swing trades, but I'll let you guys know, and I'll be interested in playing this one for the put wheel again. Moving on to Google right now, down about 0.49% on the day. Not the worst day for Google overall, but still a little bit of a pullback from the open, guys. Open, and then we just kind of consolidated for the majority of the day right there. Daily downtrend into a very nice engulfing move. The bulls have a lot of space, anything above 163.50. Just looking for a daily higher low to reset the uptrend. The clearest time frame, in my opinion, is the weekly. Look at this weekly chart, guys. Looking very good on the weekly overall. Looking great for the expansion into the resistance range, which is still set at 185 to 190. Google is still one of the cheapest stocks in big tech and arguably one of the cheapest tech stocks in the entire market. The weekly time frame is not looking bad. At the monthly candle close also is somewhat awkward. I mean, some people can make the argument that there's a head and shoulders here, and you would have to agree, but context always matters, right, guys? If July is going to be a very bullish month for the markets, okay, which we may see some very nice gains, and Google's moving forward with AI, there's no problems there. If the markets go higher, do you guys really think that Google is going to just alone, kind of like Apple, just roll over 10, 15%? Probably not, right? So head and shoulders, yes, but the context of when is the pattern happening, that is also very important too, right? So keep that in mind. What I'm essentially saying is, let's say it was the inverse. Let's say the SPY and the QQQ were on a downtrend, a weekly downtrend because of tariffs, and they were off 10, 15% from their highs, but Google had been pushing contrary to the market, okay? then you would favor the rollover on Google to catch up with the indexes. But now it's kind of doing the opposite. Hopefully that makes sense, yeah? So moving on to Meta right now. Meta up 0.61%. I'm sorry, I didn't do the quarterly charts. I'll go through these very quickly, right? Monthly candle close on the Apple. We went through it. Quarterly, we went through that one. We didn't do it on AMD. Beautiful monthly candle close. Maybe early month pullback and follow through would be my likely guess for AMD, which is why I want to play it so much on a pullback. Quarterly candle looks phenomenal if you ask me for some continuation over the next 3 months. Amazon monthly candle close looking pretty good for some trend continuation. Not the strongest one at the highs, but still very strong candle. Couple that with the quarterly candle close. Oof, this one looks ripe for continuation into the next 1, 2, 3 months. And then we just did Google as well, right? Google quarterly candle also synonymously looking very strong. Moving on to Meta now that we've done some catch up here. Meta looking good, guys. New all-time high on Meta. After, look at this, Meta platform seeks $29 billion in funding for AI data center expansion, negotiating with firms like Apollo and KKR for $3 billion in equity and $26 billion in debt. So Mark Zuckerberg is absolutely going for it. He refuses to be left behind. You may have seen headlines such as Mark Zuckerberg hiring, right, on his $100 million offers. Right, Mark Zuckerberg hiring, just type that in. I figured it's not really noteworthy because we've known that Mark Zuckerberg has been going all in on AI for the past 6 months, but he's going on an AI hiring blitz, offering other people $100 million, starting a brand new division, all that good stuff. Anyways, Meta is just really forcing their hand here at the AI play, and it's good. You do like to see them do that. They definitely have the free cash flow to do it, all things considered. Anything above 678 on a pullback, looking for a higher low for possible further trend continuation. Tough for me to take a swing trade up here on Meta. It's currently daily overbought conditions and blue sky breakout right now. So what do you want to do? Just buy here and cross your fingers that it keeps going up? Not the proper way to trade in my opinion, but you do you. On the weekly time frames, it's also looking very good. Any pullback, same concept, looking for a higher low, anything above 678. Higher low for further trend continuation, not looking too bad. Monthly candle charts looking very strong on the monthly candle close. Nothing to say here. It looks exactly like the rest of them. Beautiful candle close, and the quarterly candle close, that is a heck of a move from the bottom to the top. 55%. Imagine that, guys. And I was buying Meta shares down here. If you literally only would have clicked the buy button when nobody wanted to buy, you'd be up 55% on Meta, one of the biggest companies in the world. Like, this rally has been insane, which is why I call it the most hated rally, because everybody hates it, right? Especially those that always stayed in cash ever since, or that maybe quit the markets temporarily back in April and said, I'll come back at the end of a certain president's term because nothing good is going to happen. Now you know not to bring your political ideologies into the markets and literally just look at the companies for their fundamental valuation. That's all that matters, guys. We need to leave everything else to the side. Don't bring your personal opinions or your political ideologies into the markets. Trust me, trust. Don't take it from me. The greatest investors of your time and mine have all said the same thing, so take it from them. Take it from Warren Buffett, take it from Peter Lynch. Doesn't matter who you take it for, but, you know, if all those guys are billionaires and they say that, well, you kind of got to take it to the bank, right? Moving on to Microsoft right now, up 0.3%, looking very strong right there. Anything above 473 on a pullback, looking for a higher low for further trend continuation. You know, 500 is the next psychological level, guys. It's impossible to buy Microsoft up here for a swing trade. It's daily overbought. It's extremely extended from its own 12 EMA, which is why any pullback right now on this massive weekly move is going to be looking for a higher low, guys, right? And the support area closest is 460 down to 440. I can't really buy this one. We've been in this one. We've been over this a number of times. The time to buy was the accumulation period all throughout here, or the tariff period down there. Now it's a time to ride your gains. I'm not adding any Microsoft, but I'm definitely not selling any shares. So for me, it's a hold. Moving on to Netflix, the other hold on my list. Netflix is a fantastic company. They just released Squid Games the other day. Squid Game season 3. Maybe you guys have caught a little bit. Beautiful daily rally right now. At this point, anything above 1200 going to be looking for a higher low for possible further trend continuation. Imagine that. Possible further trend continuation on Netflix. I know it almost pains me to say it, guys. At this point, anything above 1180, even on a weekly pullback, looking for a weekly higher low for possible further trend continuation. I know, disgusting. And take a look at the monthly as well. The monthly is... that is the most beautiful month. Can you imagine this is still looking like a trend continuation candle on Netflix? I don't know what it is. Maybe just institutions just never bought into Netflix's recovery story this entire time here. And now they feel they're really late, and the tariff situation made them realize how resilient of a company that Netflix can be in any market. I don't know if that's what's fueling this rally. because they've definitely blown past their fundamentals a while ago, right? At 1,200, they're expensive. At 13, they're even more expensive. I have Netflix for my long-term portfolio, and I'm very happy they're going up, but I'm not buying any more up here. I'm not selling any here either, because it's a long-term hold for me, but it's a hold for me, right? Monthly looking good, and the quarterly candle, this is absolutely disgusting, guys. That is a massively disgusting quarterly candle, probably the biggest in Netflix's entire history. I mean, unless in terms of percentage-wise, maybe they had better percentages, but the size is just massive. Moving on to NVIDIA right now. NVIDIA also looking very strong, 0.15% to the upside right now. On to new all-time highs. Again, almost. Sorry, Friday was the new all-time high. Today was just another high, I guess. Moving on in, daily uptrend is very clear right now. Any move down, looking for a higher low, anything above 142, looking for that higher low for possible further trend continuation for the bulls. Beautiful support below 150 down to 145, which is the pullback area for some swing trade longs, if that is your cup of tea. And on the weekly time frames, the bulls still remain in absolute full domination mode of this chart. Anything above 95, imagine, is looking for a weekly higher low. Even if you crack through this range a little bit, guys, you got another massive one down here at 135 where all your moving averages are sitting. That wouldn't even look too awkward for trend continuation. It'll take some time though. The monthly time frames hold the key in my opinion though. This is a beautiful monthly continuation pattern right now, right? They tried to flush, they couldn't get it. Monthly uptrend continuation, MACD cross on the monthly. That's nothing to bat an eye at, guys, right? And the quarterly candle close is also ridiculously strong. I would expect NVIDIA to keep pushing towards the end of the year. They have the fundamentals to do it. They've been saying that for the past 6 months, 9 months, a year of accumulation. A year of accumulation. So now it might just be the distribution phase. Pay attention to it. Now, moving on to Tesla. Tesla down about 1.84%. Now, this is one that is kind of running out of momentum. It's pulling an apple. It's trapped between two ranges. Overhead resistance, 360 to 340, and below support, 300 down to about 260 will be that mark. The bulls are really struggling here after the robotaxi rollout went... Some could argue that it went fantastic. I would argue that it did have a few problems that brought up the notion that the technology maybe wasn't fully ready to be scaled at the speed that maybe Elon or some investors were seeking, right? That's all I'm going to say about that. I am a Tesla shareholder myself, but I can comment on the stock as a result. Moving in further, the weekly timeframes also show somewhat of a lack of momentum and spicy tightening range right now. So if we're looking for a tightening range like Apple, you just got to play the bottoms of the range, right? Taking a long here is a halfway proposition because you're halfway between support, halfway between resistance. You may as well get closer to one to make a play, right? That being said, the monthly candle closes not looking too bad. The bulls did a great job of recovering a lot of the Elon and Trump damage that was had. Definitely not the most bullish candle continuation, but Tesla can be carried up by the rest of the market. And the 3-month candle close is literally right in the middle, guys. This is literally right in the middle. Doesn't really show any clear direction whatsoever. But one thing that's very clear, as we are lacking some momentum to get back to these highs, and we may even be lacking, you know, the regulatory approvals and speed of the robotaxi network development to be really pushing through those highs until Tesla starts delivering positive over positive EPS quarters again and stop losing out on free cash flow and stop losing out on EPS. That's what's going to turn the stock around, guys. Moving on to Palantir right now. Palantir up 4.27% after the Russell 1000 index rebalancing. That happened on the Friday session, which saw the stock down over 9.37%, recovering roughly half of that today. Not a bad day for Palantir, all things considered. It was a daily uptrend until we did this, and now you open up the door for a bit more consolidation. If that does happen, it's not the worst thing in the world. Just look at who's in control right here. It is obviously the weekly bulls looking for a weekly higher low. Anything above 119 looking for that higher low. If we drill down a bit more, you might just see me write some short puts on Palantir under 120. That's the range that I kind of want to write under right now. The monthly candle close is a bit of a midway game right now. Keep in mind, we've been very overbought on the monthlies on Palantir for almost a year at this point. So it is begging for some pullbacks eventually. Whether that happens in the next month or in 6 months from now is anybody's guess, because it is looking quite good. The quarterly candle close still shows the bulls are very strong, right? So can we have some short-term pullbacks on Palantir? Yes, but I would say until we set a weekly downtrend, we can't really say that we're going in for a few months or maybe a month and a half of consolidation and just taper off some of these overbought conditions. Palantir is looking good. I still have some shares. I'm not buying any more up here. I'm not selling any. I'm just holding because the valuation right now is, let's just say, pricey. Moving on to SOFI right now. SOFI up 6% today off of the news. sharing in the Robinhood news, essentially, that more money will be coming to digital brokerages, possibly for stock crypto purposes, XYZ, and possibly away from traditional banks, which led SOFI, Robinhood, well, namely Robinhood, because it was Robinhood's news. SOFI was pulled up higher, though, 6% to the upside. It was up almost as much as 10% at one point. Very attractive move by SOFI, almost clipping into $19, guys, higher than the highs that we had in January, looking very strong. I was telling everybody, decent time to buy SOFI, decent time to buy SOFI. Hopefully you guys are up as much as me right now. I'm up I have a decent amount of shares of SOFI, especially the recent buys. I'm up 50% on my shares that were accumulated during this drawdown phase. So we're looking very good right now. So congratulations to all the SOFI bulls out there, guys. The daily uptrend is very clear. Anything above 1477, just looking for a higher low, getting a little bit overbought here on the conditions. Nothing bad to see. Even if we lose this and go into a daily downtrend, they're just looking for a weekly higher low, right? The pullback area would be $16 to $14. Very logical area, in my opinion, in the event that the bulls give back this. Very logical breakout, retest, similar to what they tried to do there, and then they got tariffed. Well, they didn't get tariffed, but the market got tariffed, right? They got liberated, excuse me. Moving into the higher lows right now. Higher lows possible for their trend continuation, looking pretty good. I'm not adding any more SOFI shares up there. That time has long passed to get decent risk to reward. It's not the worst proposition, but it's not cheap either at this point, right? It was cheap down here. Now it's kind of no longer cheap unless you have a 10-year time horizon. Then you can maybe make the argument with a discounted cash flow model or et cetera, price to sales. The next price targets to the upside, of course, have to be the round psychological 20 and then 25. Monthly candle close looks very bullish for continuation to the upside, looking very bullish. And the quarterly candle close looks even more bullish for some quarterly momentum continuation, looking very strong. Moving into Uber right now. You saw that quarterly candle close on Uber before I changed the time frame. Very attractive move on Uber right now, going for maybe more new all-time highs. The next stop for Uber is possibly going to be the $100 ever so elusive mark. The dailies are looking very good. Daily engulfing move right now. The bulls tried to give a little bit of breathing room to set the higher lows and go, but they didn't want to give back too much at all. This is still just one daily move. Any move lower, going to be looking for a higher low. Anything above 82.50, looking for a higher low for further trend continuation. No swing trades on me for Uber right now. That was to be had down there. Several of you guys in the comment section and in my Discord told me, thanks for the trade. I bought these lows for the good old breakout, retest of a great range of resistance, and now run. So congratulations to you guys. You guys must be up very nice right now on that Uber trade. The weekly timeframes are looking good. The monthly timeframes are looking even better with the very bullish monthly candle close and the quarterly candle close looking extremely strong for some possible further continuation, which could bring us into the $100 mark as soon as this upcoming quarter. At 93 bucks is kind of, I mean, Uber's not expensive at 93 bucks, but you can't arguably call it cheap anymore as it was below 70, which is where I was kind of advocating for people to build positions, or rather myself, because none of this is financial advice. Moving on to TSM right now. TSM down 0.91% today, but I mean, no biggie, guys. They set an all-time high on Friday, not giving back too much of the move. TSM's looking very strong. Support area below 211 down at 200 is the range right there. Any move lower, just looking for a higher low. Anything above 206 to maintain the trend pattern. And even if we lose the trend pattern and go daily downtrend, you'll just understand what the bulls are looking for here. Just a little bit of a back test of the support range, similar to Uber. Whenever you want to reference stuff, it's very clear, right? Break out of a nice all-time high range, you can back test it, right? It doesn't necessarily mean that every single breakout of a range is going to mean to the moon. Oftentimes they can back test it first, right? So that being said, TSM right now at the mid to $20 range is not that bad of a proposition. This has to be one of the only stocks in or around its all-time high that is still fundamentally cheap. Yes, it is cheap. It's trading at a 23 forward price to earnings with very nice revenue and EPS numbers, very nice net margins, and very nice free cash flows, all things considered. And with that being said, that is the rundown, guys. Or sorry, TSM monthly looking so strong. So strong on the TSM monthly right there. Very beautiful monthly candle close. Leads us to believe that continuation is possible. And the quarterly candle close speaks for itself as well, right? Very bullish close. So all things do point, at least on the technicals, that the markets can push higher. Now, that being said, if we get some bad news on tariffs, et cetera, et cetera, et cetera, can we have some short-term pullbacks? Yes, But the market is pivoting now to an environment where it does see trade deals on the horizon, and that tariffs may not be the biggest deal that people possibly portrayed them to be just a few short months ago. There's probably going to be a lot of trade deals on the table. Today, the EU accepted the blanket tariff proposition from President Trump, but said that it wanted to go or ask for some exemptions. So that news was initially received a bit poorly by the markets, because it goes to show that, you know, the market was expecting a deal on that, not necessarily the European Union just rolling over, accepting the tariff, then asking for certain exemptions here or there. So we will see. Trump has been sending out letters all across the world, essentially over the past 2 weeks. We will see which trade deals can be brought to resolution within the next 2 weeks. The tariff trade deadline for the 90-day extension is July the 8th or 9th, I believe. However, Trump verbally has said in the past week a number of times that he would most likely extend that tariff pause just so that it's conducive to more negotiations and more talks. So keep all that in mind, guys. And the number one thing, as we've been saying, and as the Federal Reserve has been saying, inflation so far is dead. We'll see if the tariff impacts inflation come Q3, that's for sure. The only thing that could possibly derail these markets right now in a big way is if we start getting really big jobs misses, and pay special attention to the JOLTS jobs openings tomorrow. If there are far less job openings in the economy, you got to watch out. It's not going to sit too well with the markets. If the non-farm payrolls and ADP employment as well, private and public employment, if they both come in far below the expectations and or negative, you're going to have a problem, right? It might be a case of bad news as good news, because that would push the Fed to cut a lot faster. So it leads to be seen whether or not it's going to actually result into a recession or not. That's too far away, right? All I'm here to say, guys, is very simple. If you're swing trading, it's very simple. It's always been so simple. Trade with defined levels and defined stop losses. Do not get too greedy. I give a lot of those levels in these videos, so hopefully it's able to inspire you, whether you're day trading or swing trading with daily and weekly timeframes. Use the levels and use stop losses. Don't get too greedy on your call options either. You make 100% on a call option that you've been holding for 2, 3, 4, 5 weeks. If you make 100% on it and you have multiple of them, how about we close half and make the whole trade free and ride the rest for free rather than getting greedy on everything, right? It's just best practices for trading. If you're long-term investing, guys, the recipe has always been so simple. Please just buy in DCA with every single paycheck, every 2 weeks, 10% of your paycheck minimum for the entire rest of the time that you are actually employed and salaried, which could be most likely the next 5, 10, 15, 20, 25 years. It's always been such a simple recipe. Don't take it from me. Take it from legendary investors that have come before me. The DCA method is the cleanest, rather than trying to time the absolute bottom of market cycles, the absolute top of market cycles, sell all your long-term portfolio here, try to get back down Q3, Q4. Can we just please just DCA and not worry about it too much and just let our long-term portfolios ride to minimize? You guys want to take swing trades like that? Use the trading account, not the long-term portfolio, okay? It's not what it's meant for overall. So with all that being said, that's everything I had for you guys for the market rundown. We can jump into a few key names right here. Robinhood. So here's the news on Robinhood. 13% to the upside, another 2.5 in the after hours. Robinhood, pure meme stock at this point, right? Robinhood gives out tokens of OpenAI and SpaceX in Europe for free for everybody that signs up for their new service. Tokenized asset service will be available exclusively through Robinhood's EU crypto app, where more than 200 tokenized stocks and ETFs are now tradable 24 hours a day, 5 days a week with no commission or spread. So this is Robinhood's entry into the European markets. And for everybody who signs up, you guys get free OpenAI and SpaceX shares, $5 worth. It's pretty good, no? I would like to have that. Maybe I open a European Union account. I probably can't, but hey, let's just be honest here. Very good news for Robinhood overall. Of course, this is another revenue stream for them. If you don't know what this means, it's very simple, guys. Europe can't always trade, depending on the broker, you can't always trade US stock. You can't always buy US stock unless you have international permissions in your account, which is why a lot of European brokers such as Trading 212 or, eToro or even Interactive Broker sometimes, if you don't have international capacity, they used to trade CFDs, contracts for difference. They're not exactly shares, but they allow you to trade on the US stock market, right? That being said, Robinhood is taking a different approach using tokenization, right? Purposing their blockchain capacities to that, which is very good. It's just another way of doing it. But Europeans have had many, many different ways of trading US stocks in the past. But it's nice to see Robinhood approaching another market. People went absolutely crazy on this news, and now Robinhood is trading at a very rich multiple, right? What I don't want people to do is buy things blindly up here at $93, thinking that they are early on a stock that's trading at an $82 billion market cap for future revenues. I mean, this news will bring up the revenues for sure, right? But 2028 revenues are going to be 5 billion. Let's just say they get a bit more revenue. 6 billion, 7 billion. It's trading at 10 times price to sales for 2028. That's a tech company's average multiple. Now, sometimes we can get crazy with valuation and say it should be worth a 15 multiple price to sales, 20 multiple on the price to sales. But is that very realistic, guys? Probably not, right? So all things considered, if we take the 20, you don't even want to know what the valuation is for a 2025 multiple. It's very high. All that being considered, I was very vocal on the channel. I enjoyed Robinhood under $50. And as a matter of fact, we played it a few times back here, and a lot of our members made a lot of money buying Robinhood stock down here. However, there's a time to buy, there's time to buy, and there's a time to hold if you have shares, and then there's a time not to buy, right? Arguably, if you're buying after day, what's the risk to reward profile? Is it as good as people down here? I understand you may want to participate, but sometimes the best trade is no trade at all, guys. What are you going to do? Just buy here and just cross your fingers and hope that it performs like Palantir and just goes up in an absolute straight line, disregards fundamental valuation, everything like that? I mean, it's fine. We're in that stage of the market where a lot of stocks are going to disregard fundamental valuation, all things considered, right? And that's fine if you can kind of turn your brain off and just take the risk and just say, you know what, I'm going to take this trade. I'm going to get into Robinhood, but if they break the lows of today, I'm out and I'll wait for a bit more consolidation and whatnot, okay? Sure, that's fine because you're entering with a plan, but just buying it here and just crossing your fingers, you know what I mean, and closing your eyes to valuation, it's not a recipe for success across every single stock, right? We want to derive replicable methods of making money, not just being like kids chasing a soccer ball, chasing the hottest stock today, and then Rocket Lab tomorrow, ASTS the day after, SMR the day after, HIMS the day after that, everything. That's fine if you're day trading, but like building a portfolio and only ever buying things when you hear about them everywhere after they've rallied significant amounts, that's not the best way to build a portfolio to hold for the long-term future, right? I understand you guys want to make money quickly, but that's not the answer sometimes, right? It's just not the answer. The making money quickly is very tough in markets. It might seem very simple when the markets are moving like this, but if you only have $1,200, $2,000 to your name, if you think you're going to be like some people on Wall Street Bets and turn that into $100,000, $200,000, $300,000 and change your life, well, just think that on that sub, there's 4 or 5 million people and you can find 2 or 3 of those posts per week. How many other people you think try and lose everything, right? So just be very careful, guys. I know the people that watch these videos are usually not that crowd, you know, but just keep all that in mind, right? That being said, other than that, SoundHound, right now, 9.16% to the upside. There could be a little bit of a swing trade opportunity on SoundHound here. If we have a stop loss below $9 and we go for the expansion 13 to 14, that's decent risk to reward. What are you risking here, right? You're risking like $2 to make maybe $4. That's not a bad proposition overall. It's not been that favorable, but I do see a swing trade there. FSLR and some of the solar plays coming higher because of the new propositions in the bill, which is going to see that they're not going to have their tax credits removed and actually maybe maintained in place. Upside target for FSLR, 190 up to 220. This one for me, for a long-term portfolio, it's a very cheap valuation right now. Let's not get it twisted, right? The valuation is very cheap, but the whole sector's been out of favor for like 4 years. You know what I mean? Just look at Enphase. So these are plays, but they may take longer than you might expect to actually come into bullish favor and actually start doing what they were doing all the way back there, right? Or sorry, that's 2007. Back here in 2021, when we had this glorious expansion phase in the markets for solar, right? So they are good deals, but you might need to wait a little bit. Kava, I mean, this stock is just very expensive. Even at $80, guys, it's just very expensive, all things considered. That being said, expensive for for a long-term portfolio, yes, it's not my first pick for a food company in a long-term portfolio, but a swing trade when the whole rest of the market is moving higher, yeah, maybe. Stop loss goes below 70, and then you're targeting this number right here, 101, and then all the way back up here, potentially 120, and then 140. So if you want to take a longer duration swing on Kava, it's not the worst proposition. Obviously, it would have been better back here. Somebody asked me, as a matter of fact, back there, and I said, yeah, there's a decent level here to make a swing trade, so just keep that in mind. SOFI, we already talked about. MSTR remains to be seen if MSTR can actually finally break out and actually finally go for the weekly completion of its pattern. It's been lagging behind Bitcoin a while now. The monthly is not looking bad, but same thing for Bitcoin, right? So MSTR not looking too bad for the follow through. I do have one swing trade on MSTR, currently going for the expansion, going for the cracks of the highs. Maybe we get that during the month of July. It was looking good though, just backing into support and the 12 EMA, looking for a bit of liftoff. We'll see if they can actually get the follow through there. Those are just some of the names on the upside. We talked about Reddit. We talked about AppLovin last week as well, but just a quick recapture. No more swing trades on Reddit from me. Those were all made down here or here. Now just looking for a retest before possible further entries. AppLovin is not a bad trade over here in the lower $320, $315 range. Just going for the breakout, retest, and possibly run. It's a longer duration trade. We're not talking about a day trade here. We're talking about a position that you might be able to maintain with the stop loss below 305. You want to get as deep as possible in here. Stop will go below 305. Then you're targeting this number right here, 430. It's a decent risk to reward proposition, upside versus downside, all things considered. There's a number of other ones, but he only got so much time, right? Moving to the downside now, ASTS, we talked about it all last week, right? ASTS would be fine if we can actually pull back into some levels that do make sense here. Talking about the mid 30s, I wouldn't mind writing some short puts. I know that's not going to sound too good for you guys because you guys just wanted to run to $1,000 from here. But all things considered, if you're just patiently waiting with this one on the back burner, it's just on a watch list somewhere and you somehow see it down here. I'm not saying it's going down here. I'm just saying if it comes down here, that's where I'd want to play it, all things considered. Enphase, they had bullish reaction on the news this morning, but then people remembered, oh wait, Enphase is a consumer stock and rates are still through the sky, through the moon, and unfortunately it's not the best for solar applications right now. So this is a lottery bet for the next 3 years, in my opinion. At the depths of brand sentiment, one could argue that it's possibly now the time to start a position, but you may be waiting around a while for those gains. ARM just pulling back ever so slightly, going for the same thing the rest of the semi industry is going for, which is basically just breakout of a big range and then maybe back test it and maybe run a little bit more. I'm not playing ARM, I'm playing other names, all things considered. And then we really covered most of everything else. Nothing else is really moving that substantially. I want to get into the trades now. There's not going to be that much, but I want to keep the video under an hour. And then the rest of the videos this week, I'll try to keep them as short as humanly possible. Only a few new trades today, guys. Okay. The only few new trades today were Apple. I did Apple today, a 197.5 put. It was on my top 5 options list. I got 88 cents for it. And the funniest thing happened, I waited for Apple for like an hour after the open this morning. I was very patient. Then as soon as it started dipping, I said, you know what? Let me send the trade alert out just so everybody is going to notice it. And if you guys get a better price than me, so be it. Well, lo and behold, as soon as I sent that trade alert out, I mean, you can't see it here because I have to go a little bit further than the 5 minute. I have to go on the 5 minute candles. As soon as I sent that trade out, that was here. It broke out higher, and then everybody got like $1, $10, $20. But I mean, anyways, that's the point, right? If I can send the alert out fast enough when I see it, and then a few moments later, people can get a better price. That's exactly what I'm looking for, right? So keep that in mind. Can't be in front of the charts 24/7, but it is what it is. Decent strike, decent price. It was on the top 5 list yesterday in Sunday's video. Then as well, I got one Canadian stock, which is Alimentation. Maybe some of you guys know it, some of you guys don't. I'll spend 2 seconds on it. I just like this area. It's the 200 weekly EMA. It hasn't been tested in so long, and whenever it does, it's usually good. I got one at 67 bucks. Everybody who's Canadian who's watching my video that trades the wheel, videos that trades the wheel, possibly a good level, 66 down to 65. They have weekly options, all things considered, and the price targets and the fundamentals on this one are very, very good. Price targets are a lot higher. Additionally, I did do one extra thing. I mean, you guys still know the circle short put is running. I got this one last week. We have the 125 strike. I'll ride this one into the ground and probably look to collect maximum profit there. The only other extra trade that I did today is Waste Management. Waste Management, I opened this trade 240 to 250 bull call debit spread for October. I paid 275 for it plus commission. So Waste Management, it's very easy, guys. It's literally just a breakout, retest, and then possibly run. Nice accumulation range for this one. 227 down to about 223 is that support box right there. Monthly shows the exact same picture as we're seeing right now. Just a bit of monthly consolidation consolidation, strong stock, 4 months worth of sideways consolidation. So at some point through October, we're just looking for the reversal pattern right here, get the trend back and start moving back a little bit higher, as this stock often consolidates for, 4, 5, 6 weeks and then puts in a bit of an upswing. That's what we're kind of looking for here for some expansion. All things considered, the portfolio is doing well today. A lot of our swing trades with call debit spreads are performing well. You guys feel free to take a screenshot. We went through these on Friday. And then obviously we have some wheel trades in motion right now and a lot of leap call options as well. Some were up, some were down today, but overall we were up on the portfolio on the day. So no complaints at all. I have a ton of buying power for anything else that the markets may throw at us this week, all things considered. So that's everything I had for you guys today. If you enjoyed today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these every Monday to Friday after the close. And lastly, if you have any questions, always feel free to leave them down below. And lastly, guys, if you wanted to join our trading community, where you can trade with me live, but also not only trade with me, build long-term portfolios with me, chat with our members, and so many other things. Obviously, you get access to all of my trades, whether they're the wheel trades, the directional trades with call debit spreads, call options, leap call options, swing trades with shares, and everything in between. Here is most of all the trades in the past 2 months. The green check marks are the wins, the red boxes are the little losses. All things considered, you get access to all those trades in real time. You also get access to our live streams in the morning for about 2-3 hours, where I trade live from the open and also take all your questions on your stocks, your options, and your long-term portfolios. You can also chat with me in our chat rooms all throughout the day and chat with other members too. And you get access to our private videos where I go through how to build a long-term portfolio, technical analysis cues, fundamental analysis cues, how to do them, how to grow small portfolios, medium portfolios, large portfolios, trading strategies with call debit spreads, how I pick my debit spreads, how I pick my leaps, how I pick my credit spreads, etc., etc., etc. The whole educational section that I don't do so much of on YouTube is all in there. And you also get access to all my charts. All this technical analysis here, you can just copy paste all my charts, all my watch lists, all my fundamental analysis whenever you see it on over 150, 200 different stocks. You get all that included as an added bonus. If ever you're interested in our trading and investing community, the details are down below in the video description. Other than that, I guess I'll see you guys back on the channel. Take care. That's it for me. See you guys tomorrow for a shorter video, I promise. Peace.